Hello. So this video is going to be covering the market structure concepts, how I map out, mark out market structure on charts, which I then will apply to my trading system. This will be focused on, how I define market structure and then how I mark it out. Other videos will go into, how I use it for trading signals. Got a cool trade marked out here. Unrelated, but a nice flex regardless. I'm gonna hop over to this chart for our purposes today. I think, yeah. So for my definition of how I use market structure, um, as a term, I incorporate price action and the stochastic RSI indicator. I take both of these together and use it to map out and mark market structure. Typically, whenever like the term is thrown around by traders, they are focused just on price action and the price action side. But since my trading system like uses range charts and then momentum indicators, I'm not like solely using price action in terms of how I map out and mark out how I believe the market is behaving. Just as a distinction and to maybe avoid confusion if you've seen that term before. Mine I use a little bit differently because I'm like accounting for the stochastic momentum indicator in terms of how I think about, what the market's doing and how it's behaving right now. I don't solely look at price. This was a trade I took today. Also, been taking a few bangers lately. So the like I said, there are two things that I look at in determining my market structure and how I think about how price and the market are behaving. It's the stochastic indicator and then the range chart that I use. Um, based, I guess we'll start from the stochastic side. So the stochastic indicator, it bounces. Essentially, what it does over time is it moves from the oversold area, which is, down at the bottom past the lower bound. This is oversold, and then it rotates to overbought, and then it rotates back to oversold. And the indicator is basically just, iterations of this in, you could call it a fractal manner over time. The stochastic behavior over time is just, it's in a constant state of rotating back and forth between oversold and overbought. So whenever it's in an oversold area, this is where a market low will form, you know, which makes sense. Price gets sold a lot, momentum goes down and dies, and gets oversold and then hangs out in the oversold area for some amount of time before it rotates back and gets bullish again based on the momentum side. So my first criteria for a low is that we're in oversold and then we get a cross back, we got a positive cross in the stochastic RSI. So here, this first green arrow that I have on my indicator represents that first cross. So I like to use the highlighter when I draw, just for personal preference. So at the area of the first positive cross, this is where we will start, and we will keep going until we hit like the low that is made by price on the range chart. It's not a very huge area here. From the cross to where the low is on the range chart. From where the low is on the range chart, we'll keep going until we hit another positive cross if needed. Um, so essentially, we get the cross here, which tells us that, we're in the oversold area and we're starting to potentially cross back and start that rotation back up to the overbought. And this continues until we get the last positive crossover before the rotation actually happens. So, sometimes there are multiple crosses. before we actually get the rotation playing out. Sometimes it's just one. In this case, we get the two positive crosses here. So our low will be from the first one to the second one. So I'll draw that out, and this represents a market low. And then from here, stochastic rotates back to overbought. And the same rules apply once we hit the overbought area. We'll start mapping out our high from the first cross down until the range chart gets to as high as it goes here, which will be from here up to here. And as you can see, the last down cross we get is actually before the range makes the high, like the last high that it makes here. So we will just stop it where the last high is because there's not another cross, like we're already rotating down based on the stochastic RSI. And that goes down here until we get oversold again. We get our first positive cross in the oversold area. So this is where we'll start with the next low. We'll go until price hits the lowest point and then keep going here until we get the next positive cross because another one happens. So based on these three markings, we have a market structure that's in the work, which is a trending bullish structure. We have a low, a high, and then a higher low. Based on my definitions, this is all that you need to say that we're in an uptrend. These are the 3 points: low, high, higher, low. If we keep marking out stuff from here, we'll see that it does continue for a bit of time in this trend, in this example. So we get the cross here at the higher low. This goes until we get overbought on the stochastic RSI and get our first cross, which happens here. Then we keep going until we hit the high, and in this case, we hit the high and the cross down at the same point. Then we go down and we can see that a low starts to form here. This one keeps going for a little while. We get the first cross, and then price just continues going down. And then we get the last positive cross here. And this is spots. It took us 4 positive crosses to actually get the rotation back that we were looking for. And then we go up here, which will be our next high. This one won't be very far at all. It'll basically just entail this cross right here. Then we'll go down to the next low, will be this area. The next high will be this area. Now you can see we're pretty much just going sideways for a little bit here. Once you've got enough down that you can start to visualize and think about how the market's behaving. So it's we hit a bottom down here and then trended pretty strongly, and then the trend kind of lost momentum and got slower. There was less of a space between our high or lows moving up. And then eventually we got a high that was not a higher high, but about equal to where the high before it had been. And things look like they might be turning around now. So that's a basic rundown of how I map out structure. We'll get more into how I actually use it for trading later. This area here looks like it was pretty bearish, so I'll go back a little ways and give some more examples. This high here, so we get the cross that starts here and then keep going up. This one, we get the cross down, but price just keeps going higher and higher. So, price keeps going higher until here. And this is where I would consider the high to stop forming. Even though based on stochastics, we're already in the overbought area, or oversold rather. You can see this was like a very strong push up. The high is, still even forming. As we get the rotation back down, we're still forming the high. So the low, would have to start after the high. Would kind of represent this area until we get the last cross here. And then don't really get much of a high at all through here. this area here, and then meg dump, and this is where the low forms for this area, and we get a little bit of a high, and goes up here and dumps again. So we'll not be hunting for longs during this stretch by any means. Hopefully this was at least somewhat helpful. Probably not crystal clear yet, but we'll go over a lot of examples. Um, Not hugely clean kind of through this area here, and then until we get this, the local low here, then we get like a nice trend. So hunting for longs in this trending area would be the thing to do, based on how clean and easy to map out the market structure is. This area is kind of just pushing too strongly for us to really make too much sense of it based on this time frame of the range chart. Cool, I'll cut stuff off from there. Like I said, we'll go into this a lot more. This was meant to just be an overview, so don't worry if it's not quite clicking at this point.